All right, well, I think we'll get started now. First off, thank you everyone for joining us and taking some time out of your day to learn a little bit more about Coalition and our perspective on what's happening in the cyber insurance marketplace. If you're an insurance broker or new to the industry, it's hard to ignore the fact that the insurance marketplace, particularly the cyber insurance marketplace, has been going through a period of rapid change and transformation, and everything from huge increases in cybercrime and ransomware to the ripple effects that that's having across the industry in terms of carrier response, coverage availability, and whatnot. And we're excited to talk a little bit more about what we're seeing across the marketplace and also how we at Coalition think about the market a little bit differently and the approaches that we've taken to partner with brokers and with our insureds to really weather the storm, if you will, that we're seeing across the market. My name is Jen McPhillips, and I'm going to be moderating the conversation today. And I'm excited to be joined by two of my colleagues. So first off, Catherine Lyle. Catherine is our head of claims, and her team is responsible for the entire claims response and mitigation process. So if one of your clients is unlucky enough to experience a claim, you're at least in wonderful hands with her team. They are responsible for everything through the remediation and payout process. And she's going to be able to share her perspective from all of the frontline work on the claim side. And secondly, excited to be joined by Sophia Kudlik, who is from our business development team. Sophia is responsible for partnering with brokers to help on everything from distribution, understanding coverage, and again, really understanding how to respond to all of the dynamics that we're seeing in the market. So very excited to be joined by the two of them and to hear their perspective on what we're seeing. So we're going to be talking about a few different topics this morning. First, we're going to be diving deep into this question of just state of the market, what we're seeing, what is sort of creating this perfect storm of events that's creating so much turbulence in the cyber marketplace. Then we're going to talk about Coalition's approach. We have a unique perspective and approach to underwriting, risk management, claims handling, and we're going to talk in more detail about how we think about the market and how we partner with brokers to deliver results for our clients. Then we're going to go into more detail about what those results are in terms of claims, in terms of remediation for our policyholders, and in terms of our carrier relationships. And then last but not least, we'll talk a little bit more about how you can partner with us and get appointed so that you can offer Coalition to your clients. Great, and just a quick note before we kick off, we're using Zoom for this webinar. You should see at the bottom of your screen two different icons, a chat icon and a Q&A icon, and we would encourage you to submit questions throughout. I'll be moderating those questions, but we'll also have some time at the end for dedicated Q&A. And with that, I'm excited to kick it over to Catherine to kick us off.
Awesome. Jen, I'll actually be kicking things off. Thank you for the introduction, and it's great to be here with all of you. To say that the last few years have been challenging from a cyber landscape perspective would be a massive understatement. So today, what we're going to really dive into, if we move on to the next slide, is really drawing the analogy of how the cyber landscape is a perfect storm. How did the state of the market get here, really? And we're going to give you tools to help as brokers, help answer all these questions for your insureds or any potential insureds who are having trouble navigating all of this. So there were a lot of contributors to the shaping of the current market conditions. And from our perspective at Coalition, some of the more pertinent ones that we're going to be talking about today are the regulatory changes, overall widespread technology risk and our reliance on technology, increased criminal activity, as well as insurers pulling back as a result of all these market conditions. So in truth, all of these individual changes and variables would have created some sort of shift in the market. However, the fact that pretty much all of these happen so closely together, the compounding of these variables only really amplifies and accelerates the market effects that we're seeing. So Catherine and I will unpack several of these for you today and try to make sense of it all. So Catherine, over to you.
Great. Well, we're going to start with unpacking kind of that widespread technology risk. And to your point, this is something that is part of a greater storm, right? It's all of these things that have converged together, but alone, this would have been a problem in itself. So as we can all recall, a year and a half ago, when we went kind of from the brick and mortar situation to a complete lockdown and everybody started working at home, what happened was we had a widespread use and immediate use and reliance of technology that either wasn't tested or wasn't tried and true, meaning there were security risks to it. So this allowed threat actors and other criminals to be able to get into the system easier, remain in the system longer. So things like a remote desktop protocol, when they're not put behind a VPN, we were then able to see supply chain issues where software became an issue for ransomware. So this widespread use and reliance then put these companies at greater risk and risk for exposure for loss. When we move forward, we then see there was a regulatory response. So regulatory, governmental, we've seen this now in the news. When we talk about regulatory, I don't just talk about regulations by state, but let's start there. Each state has gone back now in somewhat of a knee-jerk reaction to this pandemic of cyber, to this perfect storm of cyber, and have gone back and said, you know what, we really need to look at our laws. How are our laws protecting our consumers, our citizens of this state and of this country, and do we need to change it? So we've seen Virginia change their laws. We saw California put up and actually amend the CCPA to now be CCPRA, or CCPR. So now we have those new regulations that companies have to abide by. In addition to that, we've seen in our legislature on the national level, this has now come up to say, hey, wait a minute, is there something more we should be requiring? The president, we've seen him step in and say, wait a minute, we may need to look at these kind of things. Additionally, we saw OFAC advisory, right? They came forward and said, hey, don't pay, do pay, don't pay, which is what we've seen from the government. OFAC then saying, hey, look, if you do pay, do recall that we'll come back to you posthumously after pay if we find that we can link that ransom payment or threat payment to a factor that is regulated by OFAC. I was just talking about that ransomware executive order from we have from the president of saying, hey, look, we're going to start to make new requirements. There's the pipeline requirement that came out yesterday or the day before. What I'm trying to talk about here, and I don't need to go into each one of these rules and regulations, is that things are changing, right? The laws are changing. There's task force created, regulatory is in there. So this is a time that companies need to be very keenly aware of what they're doing, if they have a breach, what they'll do, and how they properly comply with all of these laws. But this all came to be because of an increased criminal activity. So as we move forward through the deck, we see that one of the things that's happened is we've had situations where we've had almost drive-by criminal activity, okay? But this goes back to something that dates back, I would say 8 years or more ago. The way that this used to work, the way that crimes of this type used to work, was that they were forcing the threat actor to monetize what they commit. So if they get into someone's system, they were saying, oh, wait, we need to get as much data as we can so we can sell social security numbers, sell email addresses, sell phone numbers. They had to gather that information and then put it to sale on the dark web. It has changed. We now have an immediate monetization. Criminals have figured out a way to either through ransomware, which is lock up the system and wait for them to pay the ransom, or two, trick someone to paying the funds that were supposed to go to their client, to a vendor, to whomever, trick them to pay it to somebody else. So that's funds transfer fraud and ransomware, which is the immediate monetization. What we also need to be aware of is that these are nation state attacks that are now happening and criminals within these countries. We just saw, the pipeline was related back by the US government to Russia. There was another attack that was before that, which was a Microsoft Exchange server. And yesterday, the government related that to China. So we're seeing these. And Microsoft Exchange server is super important because this is one of those supply chain hacks. This is a situation where they were in the software to then be able to drop ransomware, not just to one, but to multiple companies all at one time. Then they could come back and pick and choose and launch ransomware as they choose. So this increased criminal activity, it used to be a situation where they were attacking someone because of the information they had. They were attacking hospitals, healthcare, because of the private information they had. They don't need to do that anymore. Now they can trick someone to pay them, or they can demand a ransom. And that can be anyone that's a mom and pop shop up to a multi-billion-dollar company. So what's the impact, right? Sophia talked about this already. The impact is insurance carriers are pulling back. So just like any maturing industry, we've seen they've built their book in the past and then have changed and balanced that book and balanced that risk. And this has changed. Sophia, do you want to add some content here and some context?
Sure, absolutely happy to. I think those are all really, really important points. And this is what happens as a result of some of those other key variables all coming into play. So unfortunately, when we're looking at the insurance industry now, we know more now than we did ever before. And what has come to light is that absolutely every company has a cyber risk exposure. I know as brokers, oftentimes we hear, oh, we don't really have anything of value to threat actors. Well, as Catherine mentioned, it's not necessarily what those threat actors can go and resell. It's the amount, what they're relying on is being able to extort what you value as a business and put a price tag on that. So historically, insurers have built their books using retroactive data. And as we were mentioning, balancing small business risks with large risks, it really just, the balance has shifted because some of these smaller targets are big risks as well too, because they're low hanging fruit. So some of that data that has been filtered into the insurance industry quickly becomes obsolete with the exacerbation and the really ever-changing risk. The risk changes every single day, every week, every month. I know Catherine can attest to that from her seat on the claims end. And the threat of ransomware exploding is really just one example of them. But as you can see, that those underwriting considerations that we used a few years ago, they quickly lose their relevance and ultimately the profitability of these books that insurers have built. So as a result, what does the insurance industry need to do in order to recuperate and adjust? Using multiple tactics essentially to change their approach completely and entirely based on the current landscape that we're in. So the ways that we do that, or the insurance industry has done that and responded, is pulling back their capacity. Unfortunately, there's pricing and deductible changes, as well as changing of wording and coverage, or even worse, removing coverage altogether. So it's a little bit of a levers approach, right? Where either some of these things apply or all of them do, unfortunately. So what we'll be talking about next is we went over the state of the market and finished off with what the insurance industry appetite really looks like. But I'd really like to dive into now how Coalition's approach is actually really, really different. So how and why are we different? And if we move on to the next slide, what you'll see is that we look for the same things a threat actor does during our underwriting process. And we really integrate that into our underwriting when we take a look at risks. So Coalition, from the very design phase, we have integrated that technology as the driving factor of an insured's risk profile, which we believe to be one of the main indicators of what a cyber risk profile really looks like. So using that analogy, we know that many threat actors, they don't necessarily target specific industries. Remember, they're opportunistic, and in many cases, the payout for them is what's most important, rather than classifying a certain industry and tactfully going after them. So they already know with their growing sophistication that companies with more reliance on sensitive data or critical operations are way more susceptible to do whatever it takes to really fully recover. That's what the threat actors extort in a ransomware attack. And knowing how reliant the victim is onto their sensitive information or critical infrastructure in this technology environment, that's really what they're banking on. So this is the optics that and the viewpoint that we're taking as Coalition, the insurer, looking at these risks. And because we're approaching this from a really different viewpoint, I would say from a technologically holistic perspective, we are able to better mitigate the severity and frequency of some of these losses by helping clients really preemptively improve their cyber posture and prevent them from really being that low-hanging fruit to threat actors, essentially. So one of the ways that we do that is we help our cyber policyholders prior to an incident by providing ongoing monitoring and support. We constantly scan the policyholders' external environments for these known vulnerabilities, and we notify the insureds and their IT teams of any exposure that is that can be proactively mitigated, so that they can really respond to this before it has been noticed, or even worse, exploited by an adversary. So how does this approach actually work is a really big question now. And what I'll do is I'll turn it over to Catherine to really talk us through some of the numbers and show us that the proof is in the pudding.
Thank you. So the approach does work, right? Let's talk about if we're scanning as a threat actor, if we're acting like a threat actor in the sense that we're noticing the vulnerabilities that the threat actor is seeing, and we're saying, hey, look, either shut them down, we'll alert you of these things. Those results, what happens is we see less claims. So the Coalition policyholders see less claims than the market. So if you look, this is not something that you're going to say, oh, wait, but is that just this year? Look at this, 2018, 2019, 2020. When you look at the statistics, 4.7% for the national average, we were at 1.4%, 6.2% for 2019 for the national average, 5.9%, right, for what was happening in the market. Coalition consistently 1.5%, 1.6%, far below. So, and this is done because we're saying, hey, insured, work with us. Let us alert you. Let us let you know when an event, a national event has happened, such as Microsoft Exchange server, Kaseya. Not only are we scanning all of our insureds to say, you have this vulnerability that's available, so please shut it down, put it behind something. We can do those alerts every single day. And so we're seeing those results. Additionally, there's other benefits that they receive from working with Coalition. We have our in-house claims team, which is the team that I lead. We are an expert team. We've all been working in privacy, and breach response for as long as we can remember. I'm 18 years in the cyber realm. And we all have very specific processes that we follow to help the insured both understand what's going on. We can triage the event immediately. So if we know right away that we have a ransomware event and the insured has remote desktop protocol open, we help them shut it down, which then kicks out the bad actor. If we have an incident where we have business email compromise, right, we work with them to change the password immediately and also look for rule changes, because we need to kick the bad actor out first. That works also with funds transfer fraud, where we end up clawing back the funds. So we see response where when the insured reaches out to us, we're able to claw back those funds and get that money back to the insured. On the other side, we have our coalition incident response team. This is our in-house forensic team. They are the incident responders. They are the ones that we have that we can use to work the forensics to figure out how the threat actor got in, how long they were in there, and where they transversed and what they saw and what they took, if anything. That helps us to work with counsel, who then says, hey, look, to meet your regulatory compliance, right? What we just talked about before, to meet that regulatory needs, you need to be able to say where, who, what was viewed. And then we can notify. We can work with data mining entities and also notification groups so we can notify. So it becomes a full package for our insureds. I'm going to pause right there. I saw some questions. Are there questions that came in, Jen?
Yeah, so one question that came in that kind of goes to the results that we're seeing. Question was, does purchasing higher limits and higher levels of coverage actually increase the cost of cyber attacks? And specifically, are threat actors using that coverage information to determine things like how much of a funds transfer fraud they'll try to demand, or how much of a ransom demand they will, ask for from a client?
So having higher limits or having insurance is not increasing what we're seeing in the market. To hold otherwise would just leave an insured more exposed. Instead, this is what's truly happening. The threat actors are in the system longer. What they do is, if we're going to just talk about ransomware, what they do is they're finding out exactly the net worth and the value of that company. How much can that company afford to pay? And they're using that as the basis for how much they have. Yes, there have been situations, and we've seen that in the market, where policies have been found. We actually encourage our insureds to not keep the insurance policy inside one of the trees inside of their drives. Instead, we ask them to print it out, or better yet, to leave it in the policyholder dashboard within Coalition so they can access it at any time. But when we've run into those situations, we have been able to successfully negotiate with threat actors to be able to say, no, that insurance doesn't apply, or whatever other reason we come up with. Fortunately, the threat actors aren't great insurance. They don't have great understanding of insurance as well. When you ask about, does Coalition have a benchmarking tool that brokers can access to consult insureds about what limits they should consider? We actually have a calculator, which then you can then enter in the data and the stats to be able to start to figure out how much things will cost and then how much risk transfer is needed.
Perfect. And I think we received another question which says, now that we are transitioning to a hybrid work deployment, sometimes in the office, sometimes at home, some things anywhere else you can accomplish goals, how is Coalition planning to navigate these changes? So if we transition to the next slide, actually, I think that this perfectly fuses in with answering this question. And at Coalition, we recognize that having a proactive stance to mitigating risk is paramount during these really uncertain times of transition and transitioning back. So how do we really support our policyholders? And here's on the slide, you'll see a few different ways that we really do that to ultimately try to reduce the cyber exposure and improve just general knowledge and cyber posture, I think, in the overall landscape. So the first way we do that is through instant security alerts, through vulnerable public infrastructure. So if there is something like a zero-day attack, like we saw earlier this year with Microsoft Exchange as an example, we will proactively alert our clients that, hey, this is sort of something that you really need to consider, and it's an exposure that needs to be looked at and mitigated. We run these scans, as we mentioned earlier, on a constant basis. And that is one of the ways we keep our policy insureds really in the loop as to what they should really be keeping a focus on. Another way is through our on-demand security support channel. So really what that is answering any policyholders question by our security team experts, as Catherine was mentioning earlier. So answering some of those questions in like a live setting, and having that resource as well too, to be able to, especially for smaller companies, that's something that they rely on to really navigate some of these uncertain waters. Unfortunately, you can be doing everything right and still be, vulnerable to cyber attacks, but it certainly helps having resources that can help give you the tools to really understand it. And speaking about tools, there's also the free and discounted security tools as well too. So these are coalition provided discounted services, really services that have been vetted by our security teams, and what we recognize as necessary to help mitigate what we're seeing as the threat landscape. So there's things ranging from cyber training as well for your staff, to EDR solutions or endpoint detection and response, and multitude of others which you can access through our platform as well too. So on top of that, so we talked a little bit about the tools, but what's changing on our side is that we've actually expanded not only our offerings, but also our relationships, as well as more excess offerings in the last year. So as an MGA, we've expanded our carrier relationships with both of our reinsurance partners, Swiss Re and Arch as well too, multi-year agreements to become more of a sustainable solution to all of our policyholders as well. As well as very exciting, adding offerings, and we're now able to write excess in both Canada and in the US as well too. So those are sort of both new things that we wanted to keep you in the loop on as well.
So we've had a number of questions come in, and would encourage you to keep submitting questions. So thanks for those who've already done so. We had one person ask specifically about the CNA attack. And obviously this made huge news in the insurance world a couple of weeks ago. And the question was really, doesn't this attack point to the fact that CNA, insurance carriers, and also their policyholders are at risk? And Catherine, wondering if you could respond to that in terms of how we think about that, and just perspective on insurance carriers being a target as well.
So insurance, everybody, listen, there's not an industry out there that is not a target. The reason that CNA was targeted was not ultimately to get the limited book that they have for cyber. Remember, CNA's largest book is commercial auto, general liability, equipment breakdown, ocean marine, inland marine, and the list goes on, professional liability. So what we're finding, though, is that criminals are not taking that extra time to sort through every single cyber policy that CNA has to then say, now we are going to target them because they have insurance. The question I was responding was, if they find out if they have insurance, right, during the course of it, how does that muddy the waters? But we have not seen a direct correlation towards the limited book that CNA has for cyber, that they then were attacking those companies. Instead, what we've seen much more is this automated attack system that they're having. So that what they're doing is a drive-by situation. If they have RDP open, making you low-lying fruit, Microsoft Exchange Server. Germany was, I think, the second largest country that was hit by China's attack. The other one's Kaseya, those types of things, because those are these automated attacks where they end up pulling in a lot more people all at one time.
Now, another question came in about excess and what we actually mean by our excess coverage and our excess offering. And Sophia, maybe you could talk a little bit more about what that product is and how that is different than our primary cyber coverage.
Yeah, absolutely happy to. So generally the way that an excess submission would work is when a submission is sent, we would typically be able to sit excess over really anything that Coalition as a primary carrier would be able to insure. So of course, this relates to cyber and technology errors and omissions. Anything beyond that as a package policy, we really aren't in that space yet, but we are able to drop down onto the primary form that we closely relate to. Catherine and her team is part of the team who really looks at some of the underlying policies and can speak to a little bit more of the details in terms of what are the specific coverages that we do fall down under. However, yes, generally we are able to offer excess limits on a tower basis, not overhanging necessarily, but providing limits of 1 to 5 million. And that really depends on the submission and the quality of risk. Hope that helps.
Yeah, that's great. Thank you. Another question about our appetite and what industries we like to write and maybe the ones that we exclude from our appetite. And Sophia, would love if you could respond to that one as well.
Yeah, absolutely. So generally, I would say that there are certain, classes that have inherent risk exposure. Certain things like payment processing companies, adult entertainment, some of these different industry classes, which we wouldn't be too keen on writing. However, we do like to say at Coalition that feel free to send us something so that we are able to actually have eyes on it and take a look at the risk classification. It really depends on also the controls as well of each particular risk, and these are so unique to every individual submission that we always say send it to us either way, and we'll take a look at it. Generally, those are some of the no-nos, but also within our underwriting approach, what I'll mention is that we're leaning towards really, as we were mentioning throughout the presentation, a technological viewpoint. So certain controls that are not in place for insured, such as open remote desktop protocol. These are things that we flag during our initial underwriting review using our non-invasive technology scan. So really what we'll do is we'll alert the client into, hey, this is something that we noticed during our underwriting process. It doesn't necessarily fall out of appetite. It's just really something that we want to bring to light for the insured so that they can then close this port, and then we can take another look at it when some of these exposures have been mitigated. So that kind of dives into a little bit more of the technical crux of the underwriting, but I hope that provides a little bit more color as well too, in terms of our appetite using a control-based viewpoint.
We've had a couple questions come in about our funds clawback process and also about recovering stolen ransoms that were sent to a threat actor. And Catherine, I'm wondering if you could talk a little bit more about both of those things, about our funds clawback process and how the claims team actually is able to successfully claw back those funds, as well as some of the work that we've done in terms of recovering ransoms and working with government agencies in that process.
Sure. So we have a very strict protocol, and the quicker that our insureds meet and help us, we're able to recover more and more funds. So average funds transfer lost before recovery, just to give people a taste, has now risen from $117,000 in the first quarter of 2020 to now $326,000. The reason I lay this out to you, because I think the more important message is that what's happening is that these threat actors are in the system longer, and they're actually able to play a better long game. They watch and see who's paying whom, when, and how the structure works within the company, so that they're able to get that longer, that bigger payout. Additionally, there's two other factors that are happening. One, people aren't in the office. So they're not able to turn to each other and say, hey, Joe, I got this demand for payment, from the CEO. Seems a little funky. What do you think? Instead, they're like, nope, doing my job, must pay, must move forward, right? Or, hey, there's a change in this because of COVID-19. Okay, make the change, move forward, keep working, keep working. So that's the second factor. The third factor why funds transfer frauds have increased, but also recovery has decreased a bit, is because of the money mules. As you'll all recall, kind of in the beginning of this year and of last year, states were having a huge amount of unemployment fraud. And in that, they were using a bunch of money mules to basically go to banks, get the money, transfer the money somewhere else. They've now flipped to now do this for funds transfer fraud. So we're seeing more and more money going out faster and quicker, both from our insureds, but also the money mules are transferring that money that much faster. Now, what we do on the reverse side, if our insureds can tell us within 72 hours, we work with both our banking contacts, our insured, and our governmental contacts, right, our law enforcement contacts, to basically go knock on the door of those banks and say, freeze that account, so that we've been able to have a higher rate than most other carriers on recovering those funds.
And just to put a number on that, we were looking at this data today. In the cases where we've been able to recover funds for our policyholders in 2021, we recovered 95% of lost funds. So Catherine's team, they're doing an incredible job at being able to recover those funds. And really what it does is it protects the limit that your client has so that it's not eroded by needing to pay out of funds transfer, so that they can retain that limit for other things like breach response or other things that may be needed in the course of that remediation process. We got another question that came in about our cybersecurity partnerships and some of the other proactive sort of pre-incident types of things that we offer to our policyholders. And, Sophia touched on a couple of things that we offer, but maybe you can talk a little bit more about some of our partnerships and partner offerings that we have through our policyholder dashboard.
Absolutely. So actually, the platform that we would recommend to use is Coalition Control. This is our main policyholder dashboard where you can see all things relating to your product, the insurance product, as well as all of the technology partnerships that we have. So this is generally the platform we typically point our brokers and clients to. And really what it does is it really explains what some of these service areas are. As we mentioned, education, certain tools are really, really important. And I sincerely empathize for anyone in the security field because there is so much out there and it seems like everyone is trying to sell something. But what we've done is we've created a shortened list really as to the tools that we believe work and we have seen work. And these partnerships are ones that we discount for Coalition policyholders further. Now, these are discounted and some of them are also complementary as well too, and the details can be found in the Coalition platform. But the reason that these are so imperative is to, again, mitigate the cyber risk exposure that you have to the threat actor landscape. Really by implementing some of these things, we try to encourage our policyholders to take a defense in depth approach. And the way that I would describe it is the more layers or perimeters you add into your defensive cybersecurity strategy, the less likely you are to have threat actors who actually are able to penetrate all of those layers, or they kind of give up because they're looking for an easier target too, right? So what we try to do is provide our insureds with as much information as possible to give them resources to make sure that some of these things are enabled, like multi-factor authentication and help with that, phishing simulations and training for their clients, endpoint detection and response technologies to really mitigate and watch what's happening on those endpoints, because I think we all know the endpoint is the weakest link and it only takes one. So hopefully that helps answer some of those questions, but certainly happy to follow up with that link to Coalition Control if you're not already familiar with it.
Thank you. Maybe a last question to end on, and Catherine, maybe you can address this since you have direct experience with our carriers. The question is, what paper do we issue policies on? And you can talk about what our different products are in different markets.
And I may need some help from Sophia a little bit here because I'm the end user of those products, right, as your claims person. But we have for Swiss Re is the lead paper for the small and medium market. So we use their, I believe it's NAIC or NAC for their paper for lead. That's for the small and medium market for Canada and for the admitted paper as well. So they take the lead there. And then in the excess market, we run with a Lloyd's team and same with the middle market when we have Arch that leads out as well on those paper.
Yeah, and just a note, that's multiple A+ rated carriers and, have extremely strong carrier relationships and with, you know, some of the best rated carriers in the world. And so that's always been a main focus of ours, is being able to provide best quality product, best quality paper to our brokers and our policyholders as well.
Awesome. So maybe the way that we'll end off is just to thank everyone for making the time to join Catherine, Jen, and I today. Hopefully you learned something about not only the landscape, but our platform as well too. And if you are interested in learning more, if you're not already an appointed broker of Coalition, please feel free to use the email address on the slide at getstarted@coalitioninc.com. And we will certainly be happy to carry on the discussion and partner with you and your team. And again, thank you for the opportunity to speak with you today.